Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is Snehi Shah. And this is the show where we take you through all the stocks that are in focus today, either on the back of news flow or on the back of technicals. But first up, let's take stock of how the markets are shaping up. Well, if you look at the Nifty, it has actually, we did see that, that recovery coming in. Then, of course, the markets fell by 0.5%. Then Nifty is still down 0.5% right now. It has given up those gains, the recovery that we were seeing on Nifty. But nonetheless, it is right now above 150 levels. That's the level that Nifty is maintaining for now. Nifty Bank also is trading with sharper cuts of almost 838 points. It's down 1.7%. And if you look at the broader markets, broader markets are outperforming the benchmark indices. Nonetheless, if you look at Nifty Small Cap, that's down 0.2%, and Nifty Mid Cap has turned absolutely flat for now with minor cuts of 0.07%. So broader markets outperforming the benchmark indices, but nonetheless trading in the red. If you look at India VIX, that is also shot up a little. It is elevated at 2.8%. So India VIX shooting up a little, and in the advanced decline ratio also, it is in the favor of declines for now, Snehi.
Okay, so that's what the market roundup is looking like. Let's get started and talk about all the stocks that are in focus in today's trading session. To do that, let's get on board Arpit Beriwal. But before we do that, let's also go across to all the action happening at the Bharat Mobility Expo right now. You have Maruti Suzuki that's in focus. They've unveiled their e-Vitara at the Bharat Mobility Expo, and the e-Vitara is positioned as Suzuki's first global strategic BEV model. Now dubbed the emotional versatile cruiser, it combines advanced technology with the strength and durability of an SUV. Let's go on the ground and get all the updates.
All right, let's get started with the show then. We'll get on board Arpit Beriwal, Manager Derivatives Analyst, Equity Research, Motilal Oswal Financial Services. And from our research team, we are joined by Ria. Hi, good afternoon to both of you. Thank you so much for joining in then. Let's get started with all the stocks that are in focus. Well, Infosys is a stock that is in focus today. That is a top Nifty loser as well. Snehi, it came out with its results. Tell us clearly that the street is not giving it a thumbs up.
Absolutely, Ankita, first up, right off the bat, we did think that these numbers were really good. The street would, react really well to these numbers, but that's not been the case when it comes to Infosys, because that stock is absolutely not recovered at all from the day's lowest point. Continues to be almost 6% lower. Now, just to run you through what the numbers look like, revenue is up roughly 2% sequentially. EBITDA margin has also seen a slight bit of a very nominal expansion. PAT is up 4.6% sequentially. Their constant currency revenue and their PAT are above what the street was expecting. Margins are in line. So you might ask why the stock is falling right now. This is on the back of a note coming in. This is the Morgan Stanley note, wherein the company says that wherein the brokerage says that the company's revenue growth was driven by a higher component of third-party items in its pipeline, which drove concerns around the quality of the beat and the raise, which means that this is a third-party contribution coming in. This could be seasonal, this could be a one-off, and if you remove that, if you extract this component from the overall numbers, the numbers are largely not in line with what the street was expecting. Morgan Stanley analyst said in a note that the new guidance is also lower than the estimate, and the new revenue growth guidance for Q4 implies a negative 2.3 to negative 0.3% expectations. A few other brokerage notes trickling in, but they're not being able to recover the stock or give it any positive momentum, and that stock is lagging away.
All right, but before that, before we get you more stocks, let's go at the launch of the new Maruti Suzuki e-Vitara that's happening at the Auto Expo. You look at the visuals there, they have just launched it at the Auto Expo 2025. The company has confirmed that the vehicle will feature battery packs that are capable of delivering a range succeeding 500 kilometers on full charge. Now, they have developed on the Hardtech e-platform in collaboration with Toyota. The e-Vitara will include multiple battery options and all-wheel drive system. That's what the company said, and it is likely to be priced, between the range of 20 to 25 lakh rupees. That's the price range for the new Vitara. Well, a teaser released by Maruti Suzuki had showcased earlier on that the exterior design of the e-Vitara, the SUV features a tri/LED daytime running light design, a sculpted bonnet and a bold font bumper with the Maruti Suzuki's logo prominently displayed. The rear and the side profiles include 18-inch alloy wheels, C-pillar mounted door handles, a roof spoiler and a tail lamp styled in the light bar design. And if we talk about the Maruti's interior and functionality for the new e-Vitara, it is expected to feature a dual-tone dashboard with an integrated screen for the instrument cluster and infotainment system. Additionally, the design elements include a two-speaker flat-bottom steering wheel and updated AC vents aimed at enhancing functionality. All right, so that's the new Maruti e-Vitara launch at the Auto Expo 2025, where the new electric SUV by Maruti Suzuki. But coming back to market Fatafat, let's go across to Arpit, who's on standing by with Bharti Airtel as his first pick. Tell us, Arpit, what are you seeing on the charts for Bharti Airtel?
Very good afternoon. So if you see, overall market has been quite tricky, quite volatile. And in the last couple of days, we have seen quite huge swings in indices and broader market. So in spite of that, if we see Bharti Airtel within that space, the telecom space, it has been a huge outperformer. So technically, in the from a monthly time frame, it has been consolidating from last almost 3 to 4 months, holding at higher levels. On the weekly scale, it has formed a strong base near 1570, 1580 levels. On the daily scale also, it is hovering near 50 DEMA. So in spite Nifty has corrected 4 to 5% in the last couple of weeks itself, but this counter has been quite strong and holding at higher levels. So overall setup wise, the relative strength of the stock is quite high, and I think a range breakout above 1630-35 can trigger the next momentum towards 1680, 1700 levels. So I think Bharti Airtel will be a preferred pick. The risk reward is quite favorable at current junction. One can go long in between 1620 to 25 with keeping stop loss of 1580 for an upside move towards 1680 and then positionally 1720 plus levels.
Okay, so those are the key levels to watch out for on Bharti Airtel on the charts. But on that note, Arpit, stay on with us. We'll slip into a very short break and keep it going with all the buzzers in today's trade just on the other side when we return.
Welcome back. You tune into Market Fatafat with me, Ankita Saxena and Snehi Shah. And this is, of course, where we are taking you through all the stocks that are buzzing away in trade. So let's resume then. Havells is a name that's in focus today. It is an earnings candidate. There it is trading with gains of 1.5% right now. Let's look at how Havells fared then on a revenue. As far as the revenue is concerned, on a year-on-year basis, there was an uptick of 10.8%. The net profit, however, was down 3.3% on a year-on-year basis. The EBITDA margin also saw a downtick of 1.4%. And the margin also was down 108 basis points at 8.7% versus 9.8% from the previous year. Now, a couple of brokerage notes there. JP Morgan is maintaining a neutral stance with the target price of 1,750 rupees on the share. They feel that the earnings was below what the street was expecting, impacted by the margins. The muted revenue growth in cables and wires was led by channel destocking in wires due to the copper price softness. The ECD growth of 15% on a year-on-year basis was on the back of the festive season, and that was better than what they were penciling in. The industrial business was rather muted according to JP Morgan. UBS is maintaining a buy on Havells with a target price of 2,145 rupees. They feel that the weak B2C margins reflect slower consumer demand normalization. Pricing may be impacted and could lead to earnings downgrade, but the positive read-through of KEI and Polycab from 250 basis points quarter-on-quarter margin improvements from the cable sector. So on the basis of that, UBS is maintaining a buy, and on the back of good brokerage notes, Havells is up and away.
Okay, so that's the outlook and the earnings slowdown on Havells. Arpit, you've picked out SRF for us on the charts. 1 year the stock has not done much at all. Tell us what's the outlook on the charts going ahead.
Yeah, so if we see SRF, it has a very interesting chart pattern. If we see from the last 36 months, almost 3 years, it has been consolidating in a broader range between 2300 to 2700. However, this month at the start of the series, we have seen a massive gap up opening on 9th of January. From 2300, the stock propelled to 2700 with good surge in volumes. In last couple of days, the stock again corrected for a retrace from higher levels. However, 2500 is a major gap area zone that is acting as a major support zone. And I think positionally, I think definitely a 10 to 15% rally can be seen from here on because market has corrected sharply. However, this counter is still trading in its life high territory. So classical pole and flag breakout on a monthly chart above 2620, 2650 can definitely head the stock towards 2800, 2900 levels. So SRF would be a top pick within this space. One can go long at current levels or minor dip in between 2580 to 2600 levels, with keeping stop loss at 2450 for an upside move towards 2800 and then positionally 2900 plus levels within this counter.
Alright, moving on from SRF on the charts to Irida. This is the name that you picked out for us. Ria, tell us this counter is buzzing 2%. Tell us what's the news flow here?
Well, yes, the board of the company has accorded an in-principle approval for equity investment of up to 10% shareholding each in GMR Upper Karnali Hydropower Limited and in Karnali Transmission Company, both based in Nepal, in association with SJVN for setting up a 900 megawatt Upper Karnali hydroelectric power project in Nepal, subject to government and regulatory approvals. Now, in this regard, the company has initialed the JVA for this project, which is non-binding, with 4 companies in the GMR group, with SJVN and with Nepal Electric Authority. Now, IRERA's equity investment is 5%, which will amount to approximately rupees 174 crores. And on the back of this, the stock has actually given up its morning gains of around 4%, but still trading with gains of just about 1.5% as we speak.
Okay, so that's the reason why IRERA is abuzz in today's trade, 1.5% higher. But on that note, I'm afraid we're completely timed out on this edition of Market Fatafat. Thank you so much for watching, Arpit. Thank you so much for joining us. And viewers, stay tuned to ET Now.
If you like this video, then like, share and subscribe to ET Now.